In October real estate news, the focus is on affordability. The Federal Reserve had a meeting and they indicated that they're planning to increase interest rates, which will increase the rates for home loans, for mortgages, 3 times next year. They're not going to do anything drastic probably right away, but they will take it in stepping stones. If interest rates go up by 1%, the affordability goes down by 10%. If you take an example for $1 million home, that means that to keep the monthly mortgage payments the same, buying $1 million house at a 3% interest rate is the same as buying a $900,000 house at 4%, to put things in perspective. Also this week, there was an indication that the inflation is higher than anticipated, and that will likely cause the Federal Reserve to act more aggressively and sooner. When interest rates do tend to rise, what we've found is that it's like deer and headlights. To a large chunk of buyers, and it can be a new buyer or a seller who's looking to buy a replacement property, it's like a wake-up call. They know that the low interest environment is not here to stay forever, and it causes them to act if they were on the verge of buying something or getting moved. It's true that there's a portion of the buyer demand that revolves around the first-time home buying market, and some of the demand will fall off because people are not going to be able to afford to become a homeowner. That said, the fundamentals of the real estate market in Bay Area are such that we have such a huge shortage of inventory in comparison to the demand. We're operating in this kind of an environment, and we're so far off from the balanced market between buyers and sellers that these little changes for the first-time home buyers, their demand, people not being able to afford it, being able to afford it, they don't tend to make their way into any impact from a pricing perspective for home values. I'll keep an eye on it. Thank you so much for watching. See you next time.